Welcome back, everybody. Today we are going to discuss Ijara contract, and with us we have Muhammad Tayyib. Welcome, Tayyib. Welcome back. So, Tayyib, what is Ijara contract? Like, just for our understanding, if you can define it.
Yes, let's start with the positioning of Ijara in Islamic contract. Ijara is the most commonly used contract in the Islamic financial product structures. Of course, after Muraba, which is the most commonly used product structure. Let's see where we can place Ijara in our Islamic banking contract tree. First of all, we already discussed that we can categorize Islamic banking contracts into four categories: the rental-based contracts, trade-based contracts, partnership-based contracts, and wakala-based contracts. Ijara is one of the prominent contracts in the rental-based category. If we need to define Ijara, we can simply define it that Ijara is a contract in which the usufruct of an asset or a property is transferred from lessor to lessee for an agreed period of time and against agreed consideration. So there are two things to understand: that Ijara is not transferring the ownership of the asset from lessor to lessee. It's not transferring the risk and rewards incidental to the ownership from lessor to the lessee. It's only transferring the usufruct of an asset for a certain period of time against an agreed consideration. So when we sign an Ijara agreement, the first time the term of the agreement must be known, and the consideration for at least first term must be known to make this contract valid without any elements of gharar. Gharar is the terminology in Islamic finance used to say that there should not be any uncertainty in the contract when you sign the contract.
Tayyib, you used the term usufruct. What is that?
Yes, usufruct is a legal term that actually defines a right of a person to use an asset. It's a combination of two words: usu, which means use, or the fructus, which means the fruit. So you can say when one person transfer an asset or a property to another person, the other person can use that asset, and secondly, he can take benefits from that asset. So these two terminologies are combined, usu and fructus, and a legal term is devised, usufruct. It means transfer of right to use from one person to another. It's a legal right and it has a valid contract in the eyes of law. But in this case, in the usufruct, please remember, only the right to use of an asset is transferred from one person to another, from lessor to the lessee. But there is no transfer of ownership. So the property still remain in the ownership of the lessor. Only the rights to use of an asset is transferred from one person to another, and all the risks and rewards incidental to the ownership still remains with the owner of the asset, that is the lessor.
So, Tayyib, if we refer back to our other videos, I noted that mudarba, murabaha, to me, they're kind of new terms. People are not familiar with that. But when we talk about Ijara, this is a bit more familiar term as compared to mudarba and musharaka. So is there any reference in Islamic literature, like were there any products or anything that was used historically in the literature?
Ijara is very common term throughout the literature. Ijara is normally referring to the Ijara is commonly known because it is leasing is very common conventional banking product. And if we go back, yes, at the time of Prophet or even before Prophet, this terminology was used because there was a lot of hiring. The people used to hire, purchase the things. They used to give their houses on rent and other item of use or rent. Just please remember one thing also for our viewers, that Ijara can be done only for those assets or property which are non-perishable. Ijara cannot be done for the perishable items. And Ijara is a very, very old contract which has very deep roots.
Okay, so that means it's just a rental contract, but for non-perishable items.
Yes.
Okay. So what AOP standards deal with Ijara? What kind of guidance they provide?
Earlier, there was an accounting standard, financial accounting standard 8 that deals with Ijara. Recently, EOFI has superseded that standard and brought up a new standard, financial accounting standard 32, that deals with the Ijara and all kinds of Ijara. There was a rationale for bringing the new standard. With the emergence of IFRS 16, a new leasing standard issued by International Accounting Standard Board, there was a need to match those standards to the limit they can, because of course AOFI has their own limitations. They have set boundaries. They cannot avoid any Sharia compliance. So they have to maintain a Sharia compliance. So AOFI also come up with a new standard that matches the requirements somehow to the IFRS 16, but it of course does not contain the elements that are not Sharia compliant. For example, IFRS 16 allows that all gross liabilities or net liabilities to be discounted and their net value to be shown on the face of the balance sheet. But in FAS 32 Ijara issued by AOFI, all liabilities are grossed and the gross value is shown on the face of statement of financial position, and there is no discounted applied, because discounted Islam does not recognize the discounting of discounting of items.
So in conventional banking, we have a product where we can sell our asset to the bank and lease it back. So that gives us a bit of liquidity. It generates cash, we can still use the item, and then we can lease it back, we pay an installment. Does Islamic finance offer similar product?
Yes, there is a provision that allows sale and lease back, but there is very big difference how the sale and lease back is used in conventional banking products and how the sale and lease back is used in Islamic banking system. In Islamic banking system, sale means a sale. It means it will be a proper sale between the the customer and the bank through a proper sale deed. Title will be transferred from the customer to the bank, and then bank as an owner will lease it back to the customer. And then if the bank wants to resell the same asset to the customer, at least 12 months period as per Sharia scholars prescribed must be passed between these two transactions. Between the first sale transaction and the second sale transaction, there must be a lap of at least 12 months. On the other hand, in conventional banking, it's only a mere paper transfer. No actual transfer of ownership happens in sale and leaseback transactions, and there should be no time span defined between the first sale and the second sale. It can happen in any time, between the two transactions. But in order to avoid Bayal-ina means sale and buy back, which is not allowed in Islamic banking. So to avoid the Bayal-ina, sale and lease back, there must be a period of 12 months between the two sale contracts. First contract when the customer sell the asset to the bank, and the second sale contract when the bank sells the asset to the customer.
In conventional banking, we have operating and finance lease, two different types of leases. And what I understood so far is that Ijara is kind of lease. So do we have similar types in Islamic banking?
Yes, by naming convention, you can say these are similar, but they have a lot of differences in between. First thing is there are two types: operating lease, which is a simpler Ijara structure, and second one is Ijara Muntahiyya bit Tamlik. If I need to explain Ijara Muntahiyya bit Tamlik in simple words, I'd say it's an Ijara that ends up with the transfer of ownership from lessor to the lessee. So Ijara Muntahiyya bit Tamlik basically is a hybrid contract. It has two elements. First is the plain Ijara contract, in which the asset is transferred from lessor to lessee for an agreed time and an agreed consideration. But it also has a promise. So this promise is a separate contract. It has nothing to do with the Ijara contract. This promise says that this asset can be transferred, the ownership of that asset can be transferred from lessor to lessee at the end of the lease term or during the lease term in a piecemeal way, or you can say a piecemeal acquisition of asset by lessee from the lessor. So these are two separate contracts, because in the eyes of Islamic law, two contracts cannot be combined into the one contract. So promise is a separate contract independent of Ijara contract. Ijara contract is independent of any promise. So at the end of the lease term or during the lease term, when the asset is transferred from lessor to the lessee, there must be again a contract that actually transfers the ownership from lessor to lessee. This also raises a question that whether the Islamic banking is the same as the conventional Islamic banking contract of Ijara is the same as the conventional leasing. Let me answer this question as well. There are a couple of differences between these two contracts. The first and foremost difference is the ownership. In conventional banking, the customer gets the loan and he buys the assets. So from the day one, customer is the ownership of the asset, and it's just this asset is just mortgaged to the bank or the institution for the sale. For Islamic banking, banks own the asset from the day one. It just lease out the asset to the customer for a certain period of time. So during this ownership, all risks and rewards related to the asset remains with the bank and not with the customer. The second difference is if any loss happens to the asset during the Ijara term, this loss actually belongs to the bank and not to the customer, because bank is the owner of that asset. Bank can apply risk management mitigants, like they can buy insurance or takaful or any other remedial action they want to protect their asset. But if in case, for example, earthquake came, the house is destroyed or the car is destroyed, this is the loss of the bank, not the loss of the customer. And third difference, then I'll conclude, is in conventional banking, the rent can be start anytime, even before the delivery of the asset. But in Islamic banking, the rental will always only start when the customer will take the possession of the asset and start using the asset. If any asset is taken before the use of the asset, that will be considered as a liability and will be shown as a liability on the face of the statement of financial position.
Thank you very much, Tayyab. That was a very informative session. Viewers, if you have any questions or comments, please reach out to info@ibflrc.com or follow our channel, IBFLRC, on YouTube. And if you'd like to attend our training courses, please visit our website for a list of upcoming courses and registration. Please follow our channel on YouTube. Bye for now.